Hello everyone, today we are diving into the backbone of the economy. In this video, we will be exploring how businesses are structured and how they conduct the transactions that keep them running. So, firstly, let's start looking at what exactly is a business organization. Simply put, it's a group of people working or collaborating together to achieve commercial goals. Whether it's a small shop or a massive tech firm, they all share some common traits. They provide goods or services, they aim to make a profit, and they operate regularly. Okay, so moving ahead, we have different types of business organizations. Firstly, we have sole proprietorship. This is the solo pilot. It's the most common business structure in the world because it's so simple to operate. Let's take an example that you have started a small jewelry business from your home, then you simply be called a sole proprietor. You keep every cent of the profit, but the scariest part there is that you can be personally sued for your actions. Your cars, your savings, and even your house could be at the risk because you and business are legally the same person in sole proprietorship. Then comes a partnership. Imagine that you don't want to fly solo. That's where the partnership comes in. Think of this as the co-pilots. You bring the tech skills and the partner brings the marketing genius. It's great for sharing the workload, but remember, you're also legally married to their mistakes. If your partner signs a bad contract, you're also liable for their actions equally. Then comes a corporation. Corporation is the legal sheet, is the limited liability structure. A corporation is a separate, breathing legal entity. It has its own bank accounts, it has its own debts, it has its own tax IDs. If a corporation fails, the owners, the shareholders, generally only lose the money they invested, not their personal assets. Okay, then comes a non-profit organization. We can take an example of government institutions, charitable institutions, and NGOs. Here for these non-profit organization who mainly aim to provide best services, not just the profit. Now that we have a structure, we need a action, and that action is a transaction. So every time money, goods or services change hands, a transaction occurs. These can be business to business, B2B, or business to customer, B2C, or anything retail or wholesale. So crucially, every transaction must keep the accounting equation, which is assets equals liabilities plus equity back. We need to understand here one thing, that not everything that happens in a business is actually a transaction. A transaction can only happen when there is an amount or value actually moves and we can put a specific price tag on it. A transaction has some key elements, like there must be an offer and acceptance in a transaction, there must be some monetary term or consideration involved in a transaction, and the terms must be clearly defined at what is actually being exchanged. Then a transaction is followed by a proof or evidence, which could be anything, a bank receipt, a bank statement, a digital receipt, or a paper invoice. The evidence or proof is the important part of a transaction, well, because if there is no paper, the transaction effectively didn't happen. This is the golden rule of a business, that if no document, no entry. Now we will discuss how a transaction impact the organization. So a transaction can generate revenue, it can produce or create cost for the business, and then it manages the cash flow. So the transactions are not just about selling, they also involve cost like paying rent or buying materials, managing the cash flow, the money comes in versus the money going out, is the single most important task for keeping a business alive and healthy. So this is how a transaction impacts the organization as a whole. Now we are at the end of this video, this lecture. So let's recall everything we have done so far in this video. So first we have the introduction to business organization, then comes the types of business organization, and then understanding business transactions, and then finally the impact of transactions on the organization. So let's shortly summarize all this. The structure you choose for your business, be it a sole proprietorship or a corporation, dictates your legal and financial risks. Meanwhile, transactions are the data points that tell the story of a business health. Recording them accurately using the accounting equation is non negotiable for any successful manager. So, now thank you for your time, and I am happy to take any questions from you guys. Okay, love is bye bye.